Imagine you're in a candy store and suddenly all your favorite sweets are on a massive sale. Everyone else is panicking, thinking the store is closing, but you see an opportunity to stock up on treats at a fraction of the price. That's what's happening in the stock market right now. While many are fearful due to the 2025 market crash, this could be your golden ticket to financial success. By understanding the situation and making smart choices, you can turn this downturn into an opportunity to grow your wealth. Today, we're diving into a topic that's been on everyone's mind: the 2025 market crash. Now, I know that sounds scary, but don't worry. I'm here to break it down for you in the simplest way possible. We'll talk about what happened, why it happened, and most importantly, how you can turn this situation into a fantastic opportunity. So, grab a comfy seat, maybe some popcorn, and let's get started on this exciting journey together. Okay, let's start from the beginning. Imagine you're building a big tower out of blocks. You've been stacking them higher and higher, and it's looking pretty impressive. But then, someone comes along and shakes the table, and your tower starts to wobble. That's kind of what happened to the stock market in 2025. In early April, President Trump announced something called tariffs. Think of tariffs like extra taxes that countries put on things they buy from other countries. So, if we were buying toys from another country, these tariffs would make those toys more expensive. President Trump decided to put big tariffs on things we buy from China and other countries. This made a lot of people worried because it could make things more expensive and harder to get. When people heard about these tariffs, they got scared and started selling their stocks. Stocks are like little pieces of big companies that people can buy. When lots of people sell their stocks all at once, the prices of those stocks go down. It's like if everyone decided to sell their toys at the same time, the value of those toys would drop because there are so many available. On April 3rd, the Nasdaq Composite, which is like a big basket holding many tech company stocks, lost 1,600 points. That was the biggest drop since the COVID-19 pandemic back in 2020. The S&P 500, another big basket of stocks, lost 6.65% of its value that day. And the Dow Jones, yet another group of important stocks, fell by 1,679 points, which is about 3.98%. The next day, China decided to put their own tariffs on things they buy from us, which made the situation even more tense. As a result, the Dow Jones fell another 2,231 points, or 5.5%, and the S&P 500 lost another 5.97%. In just 2 days, the stock market lost over 6.6 trillion. That's a huge number, even bigger than imagining 6.6 trillion pieces of candy. You might be thinking, this all sounds pretty bad. How could this be an opportunity? Well, let's go back to our toy example. Imagine there's a toy you've always wanted, but it's usually too expensive. Suddenly, because everyone is selling their toys, the price of that toy drops a lot. Now, you can buy it at a much lower price. If you wait until everyone wants that toy again, you could sell it for a higher price and make a profit. The same idea applies to stocks. When the market crashes, the prices of many good stocks go down, even if the companies themselves are still doing well. This means you can buy shares of these companies at a discount. Then, when the market recovers and the prices go back up, your shares will be worth more, and you could make a lot of money. Historically, market crashes have been followed by periods of recovery and growth. For example, during the 2020 pandemic, the market took a big hit, but then it bounced back, and many people who invested during the downturn saw significant gains. Now, let's talk about some interesting companies. Some of the biggest names in the stock world that are worth keeping an eye on during this roller coaster time in the market. Think of these companies like superheroes. Right now, they might be having a bad day. Maybe they tripped and fell, but soon they could rise back up stronger than ever. Let's start with Amazon. You probably know Amazon. It's the big online shop where people buy everything from books to toys to groceries. Even though the market crash has pushed Amazon's stock price down, the company itself is still very strong. People continue to shop online more than ever, and Amazon delivers those products faster than most other companies. They're also making money in other ways, like through Amazon Web Services, which helps run the internet behind the scenes. That part of their business is growing quickly and makes billions of dollars. So, while their stock might be on sale right now, the company still has strong muscles and could bounce back quickly once things settle. Next is Alphabet, the company behind Google. Google is like the brain of the internet. It helps people find information, watch YouTube videos, and even drive cars with their self-driving technology. Alphabet also owns things like Google Cloud and Waymo, a self-driving car company. During the crash, Alphabet's stock fell just like everyone else's, but the company keeps growing and innovating. Think about this. Every second, millions of people search for things online. That's not stopping anytime soon. Plus, they're putting more energy into artificial intelligence, which could become a big part of the future. So Alphabet might be down for now, but it's the kind of company that could rise even higher once the dust settles. Now let's talk about Tesla, the electric car superstar. Tesla is more than just a car company. It's a technology company on wheels. Their cars are electric, sleek, and full of smart features. Tesla has been working on new cars that more people can afford, and even a special robo-taxi basically. A car that drives itself like in the future movies. Right now, Tesla's stock price is lower because people are nervous about the economy. But if they succeed in making affordable electric cars and get their robo-taxi dream working, they could change the world of transportation. Imagine a city where cars drive themselves to pick you up. Tesla is trying to make that happen. Now here's a name some people don't know as well. Palantir, also called PLTR. This company is like a detective. They look at mountains of information and help businesses, and even governments understand what's going on. They're working with artificial intelligence too, and they have tools like AIP, Artificial Intelligence Platform, which helps companies solve big, complex problems. Imagine a superhero that can see everything at once and spot the bad guys. That's sort of what Palantir's technology does. Because more companies need this kind of help with big data and AI, Palantir is in a great spot to grow once the market recovers. They're not a huge company yet, but they have big plans. And some investors think they could become one of the top tech names in the future. And now for a real powerhouse, Nvidia, also known by its stock symbol NVDA. Nvidia is like the brain builder for smart machines. They make special chips called GPUs that help with video games, self-driving cars, and artificial intelligence. In fact, many of the smartest computers in the world use Nvidia's technology. During this crash, Nvidia's stock price got shaken up too, but this company is still leading the way when it comes to AI chips. Right now, there's a race to power things like ChatGPT, driverless cars, and robot assistants, and Nvidia is at the center of it all. They're also in high demand because other companies like AMD and Intel are trying to catch up to them in the chip world. All of these companies are facing short-term challenges because of the crash, just like how the weather gets stormy sometimes. But strong companies like these usually find a way to come back when the sun starts shining again. If you keep your eyes on them, learn about what they're doing, and wait patiently, they could help you grow your money over time. So, when everyone else is scared and selling their stocks, smart investors are looking for great businesses that are temporarily on sale. These are the kinds of companies that can help you build wealth, not just for a year or two, but for the long run. The key is to stay curious, do your homework, and remember, sometimes the best time to plant a tree is when the storm is blowing, because when it clears, you'll have a strong tree growing while others are just starting to plant. So, how can you take advantage of these opportunities? Here are some simple strategies to consider. First, think about something called dollar cost averaging. This means you invest a little bit of money regularly, like every month, no matter what the stock prices are. Over time, this can help you buy stocks at an average price, reducing the risk of investing all your money when prices are high. Next, consider diversification. This means not putting all your eggs in one basket. Instead of investing all your money in one company, you spread it out across different companies and industries. This way, if one investment doesn't do well, you won't lose all your money. Also, focus on companies with strong fundamentals. This means looking for companies that have a good track record of making money, have solid plans for the future, and are leaders in their industries. These companies are more likely to recover and grow after a market downturn. Lastly, have a long-term perspective. Investing isn't about getting rich quick, it's about building wealth over time. The market will have ups and downs, but if you stay patient and keep your investments, you're more likely to see positive results in the long run. The 2025 market crash might seem scary, but remember, every cloud has a silver lining. By understanding what's happening and staying calm, you can find opportunities to invest in strong companies at lower prices. With careful planning and a long-term approach, this downturn could be the chance to set yourself up for future financial success. If you enjoyed this video and found it helpful, please give it a thumbs up and subscribe to our channel for more content like this. Also, share this.